How long does it take to get a business valuation? This is one of the most common questions I get on a daily basis. So I chat with about 20 to 30 people a week who are looking to understand the value of a business, and they will always ask, how long does it take? And the reason why they ask that question is there is a correlation with the price of the business valuation, but I'm going to focus on how long does it take. Generally, it takes us about 2 weeks for a business valuation. And people sometimes will think, oh, that's long. Or some will think, wow, that's really quick. And it really comes down to perception. So why do people think it should not take long to understand the value of a business? And one of the primary reasons is there are online tools that people are using to basically understand the value of their business in 30 minutes to 2 hours. And that might sound attractive to certain individuals, but from our perspective, when assessing the value of a business, just entering the financials of the company takes about 30 minutes to an hour. And when we do financial analysis and industry benchmarking and financial ratios and statistical analysis, that takes us another 5 to 10 hours. And so there is just time needed to dig in and just assess the financials. Because most small businesses, whether you're looking to sell or buy a business, you need to understand the financials first. You need to have a good foundation of those financials, because a lot of individuals who own small businesses will run expenses through the business. And so it's the financial operations of the business are convoluted between what's operational and what's personal. And digging into and understanding the financials of the business are key in a business valuation. So we spend a lot of time digging into the financials. And when you use an online tool, you are not taking the time to understand and dig into the financials. So that is one of the main reasons why it takes a little bit longer. But two, there are a lot of intricacies with a small business, and understanding all the elements that contribute to the value of a business are key. So for instance, like the value of any business is the cash flow that the business is able to generate divided by a perceived risk in the ability to achieve that cash flow on a year-over-year basis. A lot of individuals that think the valuation should take a shorter time frame think it's as simple as looking at your EBITDA, your cash flow figure, or seller's discretionary earnings, SDE, and applying a multiple to it. And if you want to simplify it that much, you can. But at the same time, how do you select and choose that multiple is a key question. You won't know what multiples to select. Let's say you have 30 private transactions of your same business or of a business that you're looking to value. And it's like, okay, I have 30, what's a good business to use? I have 30 glazing contractors in the state of Texas that my business is comparable to. And it's like, that is awesome. But how do you stack up? How do you compare to that business? How do you know relative to all these private transactions of glazing companies, how do you know which ones are actually the most comparative and similar to yours, and should be used as a guideline basis of this is the multiple that should be used to apply to my EBITDA or seller's discretionary earnings or SDE? Like, it takes time and knowledge and education and financial analysis and statistical analysis to dig in and figure out, how does this company stack up against the industry? How does this company stack up against those comparable transactions? So there's a lot that goes into it. So from the timing of a business valuation, it takes time, because at the end of the day, the reason why people come to Peak Business Valuation, the reason why we work with 25 to 30 individuals a week who are looking to buy or sell a business or do gift and estate tax planning or an SBA business valuation or ESOP or purchase price allocation or any reason for a business valuation, the reason why they come to us is because we take the time to understand the business. We take the time to understand the unique characteristics and the narrative behind the business, understanding the qualitative factors with the quantitative factors of a company to arrive at a value of a business. And ultimately, what hinders the time for a business valuation, the reason why it may take longer, is we have unanswered questions that, if answered, would impact the value of a business. So for instance, we were working with a business yesterday that had approximately $2.5 million in debt. And last year, they had $1.1 million in debt. And so we were holding off on delivering the business valuation because we wanted to understand, because this was for more of a high stakes business valuation scenario with respect to divorce and litigation. The reason why we were inquiring and digging into the debt is we wanted to know if that debt was actually operational. Was it associated with the business? Was it personal, but somehow on the books of the business? We wanted to understand why that debt was incurred in such a great amount, but really all it resulted in was an increase in cash and higher expenses for the business. And it's like, why was this debt incurred? How was it utilized within the business? And these questions were important for us to know. And the individual that we were working with was not being responsive. And we held back delivering the business valuation because unless these questions were answered, and if they weren't answered in the way that we were assuming, then the business valuation is not accurate. It could be overstating or understating value. And so we go through and meticulously assess the value of the business, go through our valuation process until we feel comfortable with all the information that we have. And we ask questions. We work with you to get these questions answered and collect the proper documentation. And once we get to that point that we are ready and say, yes, we can support and kind of argue our stance on value, we will send the valuation report to you. And once you receive the valuation report, we expect questions. We expect you to want to understand why. We want to have this discussion with you because it impacts value. Let's say there's a piece of information that they did not disclose to us that took place 3 months ago that actually would impact the value of the business. Let's say they lost a key contract and they were holding out and not telling us. So a lot of, like, once you get the value of your business and you look at it, or you get the value of a business, you will have questions. It is expected. Because at the end of the day, most people don't understand the value of the asset. And that is our job. So from a time frame perspective, it generally takes us 2 weeks. And we value businesses on a weekly basis. On average, over the last 6 months, we've been around 25 to 30 business valuations a week. And it typically takes about 2 weeks for a business valuation. So if you are interested in understanding the value of a business, and you think this business valuation would help you in tremendously making educated decisions, reach out to peakbusinessvaluation.com, fill out a form on our website, schedule time to speak with us, or give Peak a call at 435-359-2684. We are here to help answer your questions and provide useful information that would impact the way you view a particular question or solve a problem. And in most cases, a business valuation can help you in so many different ways, and you won't know until you ask. So feel free to give Peak a call, 435-359-2684, or reach out to us at peakbusinessvaluation.com.